Good evening, everyone. Welcome to the Lock in Your Success Trade and Market Update for July 14th, 2013. Before we get going, we'd like to remind you that any information contained in the presentation is for educational purposes only. We're not financial advisors or broker-dealers and are not making specific trade recommendations. Also, any trades and or results covered in the presentation may or may not be live trades. In the event something is computer simulated, we do the best possible that we can to be sure that the results are accurately represented. And also the risk of loss in trading options can be substantial, so please be aware of all your risks prior to placing any trades. If you're watching this on YouTube, please be sure to visit our trading blog at www.lockinyoursuccess.com and join our mailing list so that you can stay in tune with all the great programs we're going to be coming out with. And as for what we have out already, you can take a look at the ROCK, M3, and Bearish Butterfly video series by going to bearishbutterfly.com or m3options.com and following the links from there. I'm going to try to do something a little bit different this week, and the reason I'm going to do that is because we have an awful lot of information to go over, and I don't want to make the video like an hour long. So what I was going to do is do the market update, take a look at our Bearish Butterfly for August, take a look at our V Condor trades, then shut the video down and do a completely different video for the July Bearish Butterfly, M3, and ROCK trades because of the excessive market movement we've been having. There's a lot of adjustments there, and for me to go through them is going to take a little while. All right, so let's take a look at the markets and see what we have. If we remember last week, we were sitting up here in a near a resistance area in the Russell, and I was expecting this pattern to hold somewhat similar to this one here and have some sort of a pullback prior to running higher and staying in this channel range here. The fact we didn't pull back wasn't terribly surprising because the market's really bullish. This move on Thursday was a little surprising for me. I didn't expect it to go that high. To me, that's indicative of a blow-off move, and from here, what I would expect since this happened would be for the market to tend to channel a little bit sideways. I was planning on a close under our 1040 level. Not so sure that's going to happen now, but I'd be fairly confident that probably is. And I wouldn't, like I said, I wouldn't be surprised. We may try and grind a bit higher, but I wouldn't be surprised to come back down under the 1040 for expiration or even have some sort of a pullback here. One of the reasons that, or what may be one of the reasons we didn't pull back here is if you look at the SPX 5 days ago, which was here, we broke out over our downtrending resistance area, and from there I would have expected a move at least to here, which we got. So that's not terribly surprising. Normally you fill this you'll get the market will back off and probably retest this trend line here. Didn't happen. We had a breakout from there, which is what pushed the Russell up as well. Now we're at the all-time highs, and we had an all-time record close here and the SPX, as did we with the Dow Jones, and we also did with the Russell as well. And of course the NASDAQ is at the highest level it's been since 2000, so very bullish market here. Anyway, since we've come up to this level here, we may run for the highs, but it's very likely we're going to get some sort of a sideways consolidation. We were looking at a 1680 price target for the SPX, or possibly a bit higher, and we got there. We just got there a whole lot sooner than I thought we were going to get there, which happens sometimes in an irrationally bullish market, which is what we have. If we take a look at the Dow, we came right back up to our resistance area. Again, I thought we would complete this U here, or you can call it a cup if you want. I figured we complete the cup, and we did run sideways for a day, but I thought we'd get more of a consolidation off of there. We did not. We came right up to our former highs. From here, again, with resistance, I would expect this to back off. If we come to the NASDAQ, we clearly had a breakout to new highs. And on this indice here, I would expect a retest of support. So what we're likely to see is for the NASDAQ, possibly go a touch higher, come back, retest our support area, and then bounce from here. And what that will mean on the other indices is it will get a retracement probably to the 15.3 area or so here, and then go higher. The SPX will probably get a retracement to around 16 and about 30 points, about 1650, and then go higher, probably stay in this lower trend channel once we come back. And the Russell as well will probably break back into this lower trend channel and continue to follow it and eventually be at 1060 sometime in August. So that's what I'm thinking for the markets right now. Everything is bullish. There's no fear whatsoever. That also makes it dangerous, so please be aware of that. And when everybody's irrationally bullish, and we've had a really good run from here. So from back here on the 24th, we've had an average of 7 or 8 points a day in the Russell. Every single trading day that the market's been open. And as you can see, we had 2 flat days. But other than that, every single day for the last 14 trading days has been up. So very, very bullish. And this, the steepness of this curve is very unusual to hold for this long. So like I said, we are expecting stuff to flatten out relatively soon. All right, let's take a look at our V condors. First, we'll take a look at our July V condor. And if you remember right, markets, we've just been sitting here in a regular straight condor here because we sold off the center of the position. And we are planning on expiring this. If we take a look at our graph, well, we're currently up about $3,400, which is pretty much all we're going to get out of it. But we can suck a little bit more out of these shorts here and not worry about execution risk if we just expire this. Since we've been so bullish, we are a little higher than I'd like to be. However, if you take the average of 7 or 8 points a trading day and you add it on to where we are now, we should close under the 1070 level. Might get kind of close to that, but again, I'm not expecting this to continue. I'm expecting it to flatten out. But if it doesn't flatten out and we continue 7 or 8 points a day, we should still be under our short strikes. So I'm just going to let this go. If we get to the point where we start really having a problem here, we will buy it back, but it's very unlikely. And of course, if we just settle for 1 or 2 days in here, then I may be able to buy this back for a dime or something, in which case we'll just go ahead and do that. So this is the V condor for July, and there has been no moves. If we take a look at August, we have a bit of a different story. This thing here, because the move has been so aggressive, we have been having a little trouble with this one. Right now it's down a couple $1,000s. Nothing to be too concerned about, but it's very unusual for a V condor to get down a significant amount of money to the upside. You have to have a really hard bullish run for that to happen, and that's what we've had. We had a very hard bullish run since we put this on. If we take a look at this, I did do an adjustment to this, so let's go back to yesterday or Thursday. And as of Thursday, we were sitting in 11 short 1050s. And the reason we have 11 here is because I bought some back. If we take a look at our T-log, I bought some of these back on Monday morning at around 11 o'clock. We bought 2 of these 1050 calls. So we only have 11 of them left. And that was to control our delta numbers. If we take a look at this as of Thursday afternoon, this is what our position looked like. So everything is actually fine here. Our delta numbers were fine. Our delta theta ratios were okay. We are starting to get close to this short strike. So as we pulled up in, after we went up again on Friday, what I did by noontime is I decided to roll the position. So here we're short the 1050s, long the 1080s, and we have our long 950 call. We have our long 950 put. We're short the 860 puts. We're long the 830 puts. And I came in here and repositioned, and I'll show you where we went to. We rolled our 1050s up to 1070. We added an extra put in here because we were able to sell an extra one. We had 11. We sold 12. We took our long calls up to 1100. We took our 950 straddle up to 1000. There's our 1000 call. There's our 1000 put. And we rolled this all the way up to 930, which is a little bit further than normal. But like I said, the market went so far so quickly. I was comfortable bringing this up to the 930 level, or I really had to get any kind of reasonable amount of credit here. So I rolled it to there, and we covered with the 900 puts. Again, the position's currently down a few $1,000s. This is what we currently look like here. And the chances of us hit a maximum loss on the upside of this, I would bet an awful lot against it. We'd have to have just a crazy, crazy up move. It's possible that we may not make a ton of money on this month, but it's still looking perfectly fine. So that is our V Condor for August. And let's take a look at something that's not doing so well, which would be our August Bearish Butterfly. As the name implies, it is an inherently bearish position. It does adapt very well to uptrending markets as long as they're reasonably uptrending. If they're consistently uptrending very, very aggressively, as we are, then you're going to have some problems. If we come back to here, which is Monday morning on open, you can see that we are up to 1008. We are past our add point, so I went ahead and added our 1,000 butterflies in here. And if I push forward to the end of the day, you can see that the 1,000 butterflies will be there. At this point, we're down about $4,900, no big deal. And not to be unexpected because of the very large up move we've been having. We come to Tuesday, by the end of the day, we hit our next add point. And I went ahead and added the 1020 butterflies. And now we're sitting with the 1020s, 1000s, and our 980s. As the market continued to go up, Wednesday we really didn't need to do anything. I did hit a roll point on Wednesday. I chose not to do it. So if we come to Wednesday here, the end of the day, we're down almost 2/3 of max loss numbers. We are past our 1020 roll point where I should have rolled my 980 to 1040. I decided not to do it. I was looking at the markets saying we're terribly overextended. We could probably have a day where we maybe pull back a little bit, and at that point it might be more beneficial to roll it later. That didn't happen. We had a gap up in the morning on Thursday, and I went ahead and had to roll my 980s to 1040. So if we go to the end of the day on Thursday, you can see we have everything on the call side now. We have 1,000, 1020, 1040 set of butterflies on here. We're down, we're pushing our maximum loss numbers at this point. I mean, they're around 15,000. As a matter of fact, on Thursday and Friday both, we did have some intraday pricing that was over our max loss number. However, I know from trading this for a long time that when you get a 10-point up day, the value of the butterflies gets artificially depressed, and the price fluctuations will push you under that. Trade's really was never really in a ton of trouble, so we kind of held it there through the day Thursday, through the day Friday. If we come to end of day Friday, you can see that our position still remains the same. Our delta is a touch higher than I would like it. However, we're not in expiration guidelines, so it's perfectly fine. And we're down near our maximum loss numbers, and like I said, we fluctuated intraday over and under these, but the trades isn't in that much of an issue as far as our real delta numbers are concerned. We're overextended. This still has a chance of waking out. We'll see what happens Monday and Tuesday. If we get a good flat day and maybe a bit of a pullback, a mild pullback on Monday or Tuesday, and we can stay here for much of the week without going too much higher, there's a very, very good chance this will actually come back. If not, we may be taking the loss. Like I said, it's called a bearish butterfly, and we've had another one on the series this year of very, very strong up moves. This is perhaps one of the strongest. It's been very, very consistent and very aggressive. So that's where we stand with those trades. What I'm going to do is I'm going to close this session down, and I'm going to start another one, and we'll go over our July Bearish Butterfly, ROCK, and M3 trades. All right, we'll see you in a few minutes.